Is the next big boom hiding in plain sight, inside the defense sector? As global tensions rise and governments ramp up military budgets, defense stocks are quietly hitting new highs. Citi's Jason Gursky unpacks why the sector is suddenly the talk of Wall Street.
Well, it's hard not to like both sides of the ledger that you just mentioned, both defense and aerospace. But going into earnings next week, we're most constructive at this point on the defense names. Rising budgets, both here in the United States and in Europe, provide a lot of visibility for these companies. Huntington Ingalls, Northrop Grumman, RTX, LHX, and General Dynamics are a few of our favorites going into the week next week. I expect to hear them talk about growing bidding activity, the outlook for bookings in the future, and the potential for margin expansion as we get through some of these poorly performing programs that they've had post-pandemic. Those come to an end, and we're signing on new contracts that are going to be margin accretive for these companies out into the future.
We just got this 2025 budget. And now, of course, Congress is marking up both a defense policy bill, the NDAA, and the appropriations bill for fiscal 2026. Who stand to be the biggest beneficiaries?
Look, I think everybody, it's going to be a rising tide for sure. But look, as you look at the priorities that the president has laid out, air and missile defense, Golden Dome, and those companies that are going to play into that are the missile makers. So RTX and Northrop are two companies that I would point you to. Shipbuilding, right? He has talked about the gap in capacity between ourselves and the Chinese, with the Chinese having many multiples of productive capacity higher than we do here in the United States, and his desire to invest in the throughput and overall capacity of the shipbuilding industrial base, which is why we're constructive on Huntington Ingalls and General Dynamics.
International sales, do those become a growing piece of the overall revenue pie for some of these names?
Yeah, no doubt about it, right? The Europeans are going to go from, roughly 2.5% of GDP today to 3.5% on pure defense, and 5% if you include some of the infrastructure that they're going to use to support the defense industrial base in Europe. Look, the United States has been spending 3 to 5% of our GDP on defense for decades, and we've been investing in new technologies. The Europeans, up until here recently, were sub 2. They don't have the IP, the capacity, the most capable sets of weapon systems. And so I think we are going to see the Europeans buy more from U.S. companies, particularly when it comes to air and missile defense and things like fifth-generation fighters like the F-35.
Defense tech and commercial space, these are areas where investors are very excited, both in public markets and in private markets. Do you think we're going to see, whether it's along those lines or whether it's even along some of the more traditional primes, do you think we're going to see more M&A perk up now?
Oh, that's a good question. I mean, look, certainly the lessons out of Ukraine is that we need a lot of unmanned, autonomous, attritable mass. And that seems to be where a lot of these defense companies are focused today. You've got, private companies like Anduril that have been buying companies, right? They're trying to propagate their Lattice software out onto as many platforms as they can get their hands on. So yeah, they're certainly engaged in M&A. Look, the value proposition for a large cap company to be buying one of these defense tech companies, they'd have to have a lot of faith at current valuations that the revenue is going to pull through. So. But look, I think a lot of these privately funded defense tech companies have an opportunity to continue to bolster out their portfolios over time.